Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which is in a very strong bullish trend. In fact, starting from the breakout which occurred back here when the market broke above this previous historical resistance level, which after the break was turned support here, starting from this level, the market has been showing very strong bullish momentum and bullish price action, creating a series of monthly higher highs and higher lows. Now, all this push to the upside is coming with very strong institutional buying. So it is fueled by strong institutional buying and demand for gold. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis and what institutions are doing. But for now, let's keep in mind that the market here in the monthly is in a very strong bullish trend, and let's drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear as well. We can notice this strong weekly uptrend also here. So the creation of these weekly higher highs and higher lows. Now, that's the definition of an uptrend itself. When you see an uptrend, what you are identifying as an uptrend is the creation of higher highs and higher lows. And that is exactly what the market is doing here, is creating a series of weekly higher highs and higher lows. However, what we can also see is that lately the market has started getting trapped in between these two levels. So essentially, we have some horizontal price action being created in between these two zones, but at the same time, the market seems to be now creating higher lows instead of going and testing the low here of the range. Because usually when you're seeing a horizontal range in the market, what you expect is basically the market to be bouncing essentially between the resistance and support levels. So you're expecting to see something like this. However, in this specific case, what we're seeing is that buyers, every time the market rejects the high, step in and create higher lows. And what do I mean when I say they create higher lows? Well, if we look closely, what we can notice here is that the first low was here, then we had a higher low here, now we had a higher low here, and there is a possibility to see another higher low here, potentially going and testing the high again. In fact, what we can notice is that we already had 4 times the market testing here the high of the range, so the resistance zone. However, the bottom here was tested only in these 2 occasions. So what we can see is that buyers seem to remain in control of this market, creating potentially inside of this range in ascending trend line pattern. What do I mean by ascending trend line? Well, again, this is a bullish pattern where if the market is always creating higher lows, but equal highs, so the market is creating equal highs, but higher lows, so something like this. This is an ascending trend line, meaning that at some point, buyers will manage to create a breakout away from the previous resistance zone, which seems the case of what is happening right here with all these higher lows. And at some point, the market will manage to break out to the upside. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I spoke about gold just a few days ago. I spoke about it when the market was around this level, and I explained all the reasons for which I was expecting this move lower for the market to go and test exactly this level here. Now, I will link in description that previous analysis in which I explained all the reasons for which I was expecting the move exactly to this zone. I will link that in description so you can go and check it out for more free education. But now that the market has created exactly that move, what would I expect? Well, First of all, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for gold, the first thing that we have to keep in mind is that if we are looking at the data for gold, we are already looking at gold USD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from 161.2k net positions all the way up to 237k net positions with 10,900 longs added just with the last report from an institutional perspective on gold and 2,500 shorts getting closed. Now, what this means is that institutions are adding longs, closing shorts, therefore increasing their net positions on an already bullish market from an institutional perspective, because already in the past we had 234,000 longs compared to 59,000 shorts. Now we have even more bullish positioning, 292,000 longs. So institutions have been loading up longs all along and decreasing their shorts, going from the high here at 89,000 all the way down now to 55,000. And all this institutional longing can also be already noticed on this chart if we zoom out, because it is clear that gold is in a strong uptrend fueled by strong institutional buying. So that is why the market is reacting to all this bullish pressure that we are seeing here from an institutional perspective. Now, this means that this zone here, which if we look at it here on the daily time frame, is previous resistance turn support. Because it was previous resistance here, now turns support here. Well, this means that this area could be another zone inside of which institutions continue to add longs. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now, back to the analysis. So in a situation like this, we have very strong demand and support potentially building up inside of this level from an institutional perspective. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this demand and support zone fueled by strong institutional buying. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.